Good day, everyone. I am Jen Dehar, and I'm the first reporter of the group. And our topic is about information, risk, and insurance, financial markets. So first, we have here the imperfect information. So it refers to the situations where all the parties involved in a transaction lack of complete knowledge about relevant factors or actions of others. So this lack of knowledge leads to uncertainty, which can result in suboptimal decisions. So it can also refer to the situation where buyers and or sellers do not have all the necessary information to make an informed decisions about the product's quality. Let's say, for example, sellers with incomplete information. So ang seller may not know the buyer's exact utility function, which can lead them to charge too high a price, or consumers with partial information. So ang consumer po may not have all the information nila need about the quality sa product, and making it difficult to make rational purchase decisions. Kumbaga, mas decide sila mag-purchase if wala sila information nga need nila sa quality sa product. So suboptimal decisions is so scenario is a buyer finds a used car that looks great and it's priced attractively. So they decide to buy without having inspected by a mechanic. So suboptimal decisions is ang buyer may have made suboptimal decisions kana bitang walay bisag wala sila info is paliton gihapon, bisag walay o sila kabaloon sa condition sa car, and then let's say na ay hidden problems ang car that leads to expensive repairs after nila mapalit ang car. So pwede siya matawag na the lemon's problem. So ito ganito scenario. Imagine you're in the market for a used car, and then you find a great deal on a car that looks pristine. However, ang seller is kabalo nga ang car is na history of engine problems, but wala nila gi-disclose niya info sa imuha. And then ang impact is mani siya ang classic of the lemon's problem. So where ang seller is na ay mas daga information about the car's quality than the buyer. So ang buyer is unaware sa hidden problems sa car, which is ang ending is mas dako sila mabayaran compare sa gibayad nila nga kantidad sa car. Kumbaga mas dako pa sila mabayaran nga pwede pulihan sa car. That's
occurs when one party in an economic transaction possesses more information than the others. This information disparity can create a power imbalance, leading to adverse outcome for the least informed party. So kanindang asymmetric information muna siya bitaw tong mga tao nga daghan bitaw ang nahibal-an kontra sa mga taong gamay ang nahibal-an. So like for example, nay tao nga namaligyag speaker, kato siya nga tao daghan toy nahibal-an sa mga prices ato nga speaker. Unya kato pong tao nga mopalit og speaker, kato siya ang wala bitaw kabalo sa mga price. So nay possible nga katong price atong speaker iyang patasan kay katong tao nga mapalit wala man siya kabalo. So mao to.
How imperfect information can affect price, quantity, and quality. Let's have price quantity. The presence of imperfect information can discourage both buyers and sellers from participating in the market. Buyers may come reluctant to participate because they cannot determine the product's quality. So kung ang buyers is wala kaayo knowledge about sa product or kulang ang information nga ilang nabalaan, usually kung mas mahal ang product kay means good ang quality, kay kung mas higher quality means dako ang production of cost. So pag dako ang production cost kay mas tindot ang materials nga gigamit and also the effort nga ilang gihatag. Mao nang mo result to higher price kung ibaligya na. But also daily sa tanang instances kay na-apply other factors nga maka-apekto sa pricing product like branding or sa retail makeup. Kay given na gid na mao siya, kay ila doon naman sila o naka-establish na sila og name sa ilang products. So next is price quantity. When mixes with imperfect information about the quality, a buyer confronted with imperfect information will often believe that the price reveals something about the product's quality. So kung ang buyers o seller kay walay complete information about the product or sa market conditions, it can really discourage both buyers and sellers nga participate sa isa ka market. Kay kung buyer ka, mag-visitate gid ka mapalit kay wala man mo na determine kung unsay na with that product, and then kung ikaw seller ka, unsa na lang sa di mo pag-convince ang imuha mga buyers para mapalit sa imong product. This lead to a lower sales or kita nga mo result o mo participate pa sa imong market. So tungod ani, it can leads to a lower market activity. So it's very important gid ang transparency o reliable information sa isa ka market.
Good day everyone. Good day sir. My name is Jinky Durango. My topic is learn how business raise financial capital. So firms make decisions to spend money in the present and expect future profit. They raise financial capital to pay for projects like long-term investment, reinvestment, profit borrowing through bank or bonds, or selling stock. Owner also choose how to pay for this investment. So next is how firm choice between source of financial capital. So din ako pasakon with limited customer or no profits. Early stage financial capital is crucial. This business often rely on personal saving or borrowing from the owner or angel investor. In some cases, venture capital firms invest in small growing companies, attracting funding from various investors including banks, endowment, insurance companies, and corporate pension funds. So for example, let's say John wants to start a tech company that's develop mobile apps. He has a great idea but no profit yet. To fund his business, he considered the following essential. Personal saving. John uses his own saving to fund his business. Investor. John seeks funding from friends and family who believe in his ideas and are willing to invest. Then venture capital firms. John applies to a venture capital firms that specialize in investing in the tech startup. The firms attract funding from various investors and decide to invest John company. So next is corporate, stock, and public firms. So wala ko basahon. For established company, profit can be primary source of financial capital. However, new business often need to reinvest their profit into equipment, structure, and research and development to grow even during difficult times. Firms require reliable source of financial capital to maintain their investment and sustain operation until condition improve. So, example, an established company like Apple can use its profits to fund new product development or expand its facilities. In contrast, a new startup like a Teach App company must reinvest its initial profit to purchase software, hire developer, and improve its app even if it faces challenge in the market. Next is borrowing in banks and funds. So, bank and funds are two primary methods through which firms can borrow money. So, first, bank loans involve a firm borrowing money from a bank and agreeing to repay it over a predetermined period. This method is often suitable for small businesses that may need short-term funding or smaller amount. So once this is a financial contract where a firm as borrower agrees to pay back the amount borrower plus interest over a set periods. Bonds are typically used by larger firms to raise substantial amount of capital from many investors. So, example, bank loan. Small coffee shop need 50,000 to expand its space is approach a local bank for a loan. The bank agrees to lead the money being plan over 5 years, charging interest a long way. So once a large corporate like Coca-Cola wants to raise 1 billion to invest in a new production facilities, it issues fund to investor promising to pay back annual plus interest over a 10 years period. Next is profit as a source of financial capital. So, a corporation is a business owned by shareholders whose share is in the company. Profit and losses when a company goes public, it receive money from the sale of its stock to investor. This is called an initial public offering, IPO. So example, let's say AVM goes public, issues 1 million share of stock at 100 per share. The million company raised 100 million from the sale of its stock. Then EVM, it recognizes investor expectation by paying dividends or increase the value of its stock with attract more investor and increase its financial capital. Last is early stage financial capital. So early stage firms often seek financial capital from investor and venture capitalists because they have limited information about the company. As firms become more established, they can access capital from bondholders and shareholders who are more willing to invest. However, firms may choose to borrow or issue bonds or stock to maintain control and expand without relying on shareholders.
Good evening, everyone. Good evening, sir. This is my assigned topic. Describe financial capital and how it relates to profits. So, financial capital is the money and other resources that a business or organization needs to generate revenue and provide goods or services. It's also known as investment capital. So, financial capital refers to the various forms of money and financial resources such as wages, savings, remittances, income, and rent. The two main types of financial capital are the and equity. The first one is DIP. A company receives capital now and pays it back with interest. DIP doesn't dilute ownership, but the company is obligated to make interest payments. So, DIP is DIP is anything owned by one party to another, like for example, credit cards, car loans, and mortgages. The second is equity. An investor contributes money to a business in exchange for a share of future profits. This increases the business's equity capital. So, equity is the money returned to company investors after all debts are paid and asset liquidated.
Relationship between savers, banks, and borrowers. So first, the role of savers. So there are three types of savers. So first, funds. Savers provide a foundation for a healthy financial system by providing the capital that banks lend. So it means ang savers is sila ang provide para sa foundation for a healthy financial system. Sila po ang provide sa capital that banks lends. So second is interest. Banks compensate savers for their trust by paying interest on deposits, encouraging them to save and grow their wealth. So it means ang interest is ang bangko ang nagabayad og interest sa mga gaipon o gabayad para sa interest of deposito para pa laguin ang business. So third is stability. Stability savings contribute to the stability of the economy by providing a buffer during economic downturns. So ang stability is ang gatipid para makatabang sa stability ko para sa pag-provide sa tanan aron malikayan ang banking crisis. So next is how banks operate. So, first is deposits. Banks receive deposits from savers which they use to provide loans to borrowers. So, ang deposit, ang bangko ang kuha sa mga deposit gikan sa mga ipon din. Ang mga nag-ipon o ay magbutang sa ilahang kwarta sa bangko sa pamagi sa pagbukas ng savings account. So, second is loans. So ang loans is banks lend money to borrowers at a higher interest rather than they pay to savers earning a profit. So, ang loans is ang nagapautang or nagapahulam sa money. Then, third is investment. Investment banks invest some of their assets in various ventures generating returns and contributing to economic growth. So ang investment is ang ga-invest is ang investment is ang puhunan ni mga imong i-invest sa negosyo or sa uban nga assets para palaguin imong investment. Then to lending borrowers. So first is needs. Borrowers seek loans to finance various needs including housing, education, and business ventures. So, ang needs is ang mga borrowers ang nangita o pautang para sa mga needs nato para sa pabalay, pa eskwela o sa business. Then, second is credit worthiness. Banks assess borrowers' credit worthiness to ensure they can repay the loan. So, ang credit worthiness ang manghiram para ma-sure nga mabayaran ang inyong giutang. So, third is interest. Interest, borrowers repay the loan with interest to providing a return for the bank. So, ang interest is ginabayaran sa mga nanghiram ang interest para sa pautang aron balik sa bangko. So, lending process. Mo ni siya ang mga needs sa process. First is application. Borrowers submit a loan application with detailed information about their financial situation and unintended use the loan. So, ang application is muna sila ang mga kailangan aron kailangan nato mag-submit og application para sa mga information about sa mga financial situation. Then second is approval. Based on the credit check and other factors, banks decide whether approve the loan and set the terms. So ang approval is kailangan nato ang approval aron ma-credit or ma-check ang factors sa bank. Decision pa din na sila mag-decide mag-decide para i-approve. Then disbursement, then repayment. Borrowers repay the loan with interest in regular installment and as agreed upon in the loan agreement. So ang repayment is ang mga borrowers ang nag-repay sa loan ug interest regular, then net installments as agreed upon in the loan agreement para sa ban nga agreement. Then benefits of savers. So there are three types of savers. Benefits of savers. So first is interest earnings savers. So savers receive interest payments for their deposits, growing their wealth and earning return on their savings. So ang earning interest is mao na sila ang nagaipon or nagadawat og bayad sa interest para sa ilang deposit o mapalago sa ilahang negosyo. Then maghatag po ni sila og kita sa naghatag og kita sa ilahang mga ipon. Then second is financial security. Savings provide financial security and safety net for unexpected expenses for emergencies. So ang financial security is mo ni sila ang kitabi ang mga gaipon is naghatag sila financial security para safety net ang aron dili pod magasto ang then safety pod ang ubang expenses para sa emergency. So peace of mind, knowing they have a secure savings account provides savers with peace of mind and sense of financial well-being. So ang peace of mind is ang pagkakaroon ng ligtas sa ato ang nagkakaroon ng ligtas para sa ato ang savings account aron natin peace of mind, wala tayo lang hunahon. Then benefits of borrowers. So first is access to funds. Borrowers gain access to funds that enable them to purchase homes, invest, education, or start business. So ang access funds is mao na sila nang hiram o makakuha sila access sa mga pundo aron ma-purchase ang homes or invest in education, then mag-start og business. Then second is opportunity for growth. Loans can help borrowers achieve their goals, whether it's buying a home, financing their education, or start a business. So ang opportunity for growth is mo na sila ang nagapautang, then pwede po ni makatabang o makamit ang imuhang layunin para sa imuhang business. Then third is financial flexibility. Borrowers can leverage loans, manage their finances, and achieve financial flexibility. So ang financial flexibility is mo na sila nang hiram is pwede nila magamit ang mga pautang para sa ilahang mga needs ug ma-manage po nila ang financing to achieve the financial flexibility. So mo ni ang importance balance financial ecosystem. First, savers provide capital, earn interest, banks, intermediaries facilitate lending, borrowers access to funds.
So what is risk-return trade-off? It is a trading principle that links with higher risk with higher reward. The appropriate risk-return trade-off depends on a variety of factors that include an investor risk tolerance, the investor years to retirement, and the potential to replace lost funds.
So the risk-return trade-off is a fundamental principle in investing. It means that higher potential returns come with higher risk. So ang risk-return trade-off for an individual investor is nakadepende siya on a various factors. Nag-include na dira ang risk tolerance, time horizon, and financial goals. Ang mga investor with higher risk tolerance and a longer time horizon may be willing to accept higher risk for the potential of higher returns, while ang investor with a lower risk tolerance or a shorter time horizon may prefer a lower risk investment with lower potential returns. So, it is important nga una na to nga ang risk return trade-off is not a guarantee. Even a lower risk investment can experience losses and high risk investment can underperform. And importante sa mga investor no to carefully consider their individual circumstances and risk tolerance before sila mag-make og investment decision. So for example, sa risk return trade-off is nakay 10,000 nga i-invest and nakay duha ka options. So first option nimo is saving account. So ang iyang risk is low and potential return niya is low sub. And because na siya low ang iyang potential return and because na lang siya sa 1 to 2% annual interest. Option 2, stock market. Ang iyang risk is high because stock prices can fluctuate significantly. Potential return is high sub because the stock market has averaged around 10% annual return over the long term. So, para mas ma-understand na to ang trade-off, so sa option A, sa saving account, is safer option siya with guaranteed because ang imong kwarta is protektado siya but nakabutang dito sa return, potential return is low because ang iyang growth potential is limited lang man. While sa option B, sa stock market is a riskier option with the potential for higher returns. Why? Because you could earn substantial profits and also napud siya chance nga and also there are a chance of significant losses. So para dali ra nimo ma-choose ang unsa nga tama nga decision, no? So nakadepende siya sa imong risk tolerance and financial goals. So if you're risk averse and prioritize capital preservation, a saving account might be suitable. If you're willing to take on more risk for a potential of higher returns, so investing in stock market could be a better option. So atong permente hinumduman, the higher the potential reward, the higher the risk, and it is essential to balance the risk and return to achieve your financial objectives.